How big reputationally damaging has it been for the industry?
That's pretty damaging. I mean, I think it's compounded by the fact that not just was FTX a leader in the exchange business, but Sam had obviously leaned into U.S. regulators, both in terms of donations, but also spending time on Capitol Hill. And so I think, FTX, in my view, now gets painted as a crypto problem. And I think if you really peel the onion enough layers, it's not really a crypto problem that happened here. It's fraud. And I think we should, not pretend it's something else. When Bernie Madoff, the Ponzi scheme that Bernie Madoff was running unfolded, we didn't say we need to regulate hedge funds differently. We realized, okay, there are laws and oversights that had failed. Maybe they need to be tightened in some ways, but I think that we should be clear around the FTX. While it's certainly damaging for the industry, it was a fraud.
And just to be clear, for legal reasons, Sam Bankman-Fried has pled not guilty to all federal.
It is allegedly
charges.
A fraud.
Yeah. Just to be clear, when you look at the market more broadly, and one of the things around this cycle was actually just the amount of contagion that took place, right? It was falling like dominoes, a lot of companies. So when we look at FTX, we know sort of that there's companies that had money parked with FTX. There's companies that, perhaps on the lending side connected to FTX. As you look over the next couple of months, are there any other stress points in the market, any other potential areas of contagion you're concerned about?
Well, I don't have any unique insight here. I mean, it's kind of what obviously has been reported. I don't think the last shoe has really fallen here, in that you were obviously very publicly a debate between the Winklevoss twins and Barry Silbert. But, look, there's no doubt that the industry has been, cross-fertilized in some ways. And I think that you saw that most poignantly through Three Arrows back in the late spring, Celsius, and that continued. I think some people started to unwind that after the Celsius, Luna, Terra, Three Arrows debacles, but obviously it's still to some degree the case. But look, I think, again, if you zoom out and you think about what does 2023 look like, it forces everyone, I think, to really focus on, are we solving real problems for customers? Are these technologies being deployed in a way that actually help consumers, help businesses, help citizenry, at a federal level? And I think a lot of what happens here at Davos is talking about government engagement. So I remain very bullish, but 2022 was a tough year for crypto, no doubt.
Do you think 2023 is more of a sort of rebuild kind of year rather than a sort of a boom year?
I've always tried to avoid short-term predictions because I think it's so hard to know timing. In general, I feel like crypto winters, as we have called them, have lasted 6 to 18 months. Between Luna and FTX was 6 or 8 months, and I think the clock probably restarted around the FTX debacle. So I think that in these moments, the noise and the hype and the froth exits the market, and I think companies that have real products with that have been managed carefully and soundly without lots of debt. I obviously am going to pitch Ripple's book on this, but we have over $1 billion of cash at the end of the year. We have a growing business. We have both the number of customers and the activity of each customer is growing. So I'm very bullish and very optimistic for what 2023 looks like. How that translates into the crypto market pricing is just really hard to predict.
Talk to me a bit about Ripple's business then. How was 2022 for you guys? Can you give us some numbers, revenue, growth?
Yeah.
What did you see?
So 2021 and 2022 were both record years for us. And one of the things that's interesting about that is the SEC sued us around the question of, is XRP a security at the end of 2020? And I'll admit, the beginning of 2021 was Q1 was a stressful quarter for sure, because you now have a lawsuit in the largest economy in the world, and you didn't know how your existing customers would react, let alone new customers. And what we have seen since then, it particularly non-US, well over 95% of the customers we've signed in the last 2 years are non-US. Our activity is growing more and more outside the United States, and it's because you have this confusion in the United States. So we're now processing billions of dollars of transactions every quarter. And well over half of our total transaction volume, because we do have a fiat and XRP enabled product called on-demand liquidity. over half of all of our transactions go through XRP now. That has grown. And so, again, we're continuing to sign more contracts, more customers, and then the contracts and customers we have grown, partly because we opened more corridors, more currency pairs. And so there's kind of a nice series of building a positive, virtuous cycle that helps grow the business.
Yeah, and just in terms of your revenue growth in 2022, any insight into that?
So we do, I don't know if we've publicly talked about this that much, but we have been profitable for the last 3 or 4 years and measured in the many hundreds of millions of dollars of revenue overall.
Okay, and I want to talk about one part of your business. I was reading through one of your Q3 reports. I think you've done a Q4 one yet, but there was an interesting bit in there.
My email inbox.
Okay, yeah, let's get to it.
Someone's going to yell at me about that later.
Yeah. Well, the XRP leases part of the business is interesting because something I've learned new as well. These are ultimately sort of outstanding leases you've got going on in Q3 around 35 million worth of XRP outstanding. Are you expecting to be able to get that back in the current market environment?
Yes.
Okay.
I don't know. We did have some exposure to FTX. Yeah. I think we publicly shared before there's around just over $10 million of XRP we had leased to FTX that they used for various things on FTX. What we get back from that, I have no idea. The alleged fraud. We'll see how the bankruptcy stuff plays out. And as I said, regardless of that, again, some companies were way overexposed and I think found themselves in a very stressful situation because they had too much exposure, too much debt, too many of those types of things. And for us, that I think represented about 1% of liquid assets. So, I would rather not lose that money. And I'm hopeful that through the bankruptcy process, we get some or all of it back. But it's not too consequential to the business. Okay,
and just in terms of that leasing model, we've seen lending companies during this cycle sort of come under a lot of stress. Now, these were companies, who were offering very high yield, but in the background, then lending that out at even higher yields.
Yeah.
And ultimately,
you get higher yields because you're taking riskier bets.
That's right, and ultimately an unsustainable model that came crashing down. So just in terms of your leasing model, are there any stresses there?
Well, our leasing, we try to be very careful. Our leasing model is focused on market makers with whom we partner. This isn't just, hey, we're lending out to get yield, where I think a lot of people were doing that. We work with market makers in order for them to make markets. Having XRP as part of their capital is useful. And so, I think we do charge some interest rate against that. But again, you're talking about $35 million against a balance sheet between dollars and XRP that's 20 billion. I can't do the math on that. Maybe that's 15 bips. So, from a core business, this is not material to what we do.
And again, just in terms of the healthier business, we've seen a lot of layoffs across the board, particularly at exchanges and other areas of the business. Binance the other day, however, said, well, we're planning to hire this year. What camp are you in?
Well, we publicly, when the layoffs in crypto started, we publicly announced we're still hiring. I think in Q2 last year, we hired 100 people. In Q3, we hired 100 people. Q4 is a little less than that, partly because of the holidays. We have no plans to do any layoffs. We're going to continue to grow and hire. And again, that's just, we sign more customers. We need more people to support those customers. We're obviously building, well, not obviously, we're building new products that we are excited about. And even conversations I've had here in Davos, we have existing customers coming to us wanting help with other elements of the kind of crypto ecosystem. 2022, I think will go down in history as one of the worst for crypto. But I think we lose sight. And I was at a panel that you and I chatted a little bit about yesterday, where someone was saying, well, $2 trillion of crypto evaporated. Well, between Facebook and Tesla, $2 trillion evaporated last year. Maybe I'm exaggerating a little bit. Add Tesla, Facebook, and Amazon, you for sure get $2 trillion. No one's claiming we shouldn't continue to invest in those companies. I think it's clear that low interest rates had driven a lot of froth in macro markets. And as interest rates have, the direction of travel on interest rates changed in the spring of 2022, lots of asset classes hit reset. We obviously saw some bad actors in crypto, and that added to the contagion.